what would it mean to India and back home? That's something we'll discuss with Swaminathan Aiyar, the consulting editor at ET Now. Hi, sir. Good to be speaking with you. Thanks so much for making time and speaking with us. Now that Fed has cut rates, how many rate cuts are expected in India as per you? And when does the cycle start here?
Well, frankly, Mr. Shaktikanta keeps worrying. I mean, if you ask me, he places far too much emphasis on what the Reserve Bank can or cannot do. If you ask me, monetary policy is more muddling towards a goal than any precision or fine-tuning, which is what Mr. Shaktikanta seems to be aiming at. But as I said, broadly speaking, commodity prices come down. Oil particularly has come down. Some food prices have come down so that, the export of onions has been liberalized. So in these circumstances, I think Mr. Shaktikant Das will cut at least twice if the Fed cuts twice.
Okay, fair enough. And given that inflation has been brought under the 4% mark, Swami, monsoon as well has been pretty much according to what the projections were made by the Met Department. There still are concerns regarding inflation that haven't tempered off. What is your outlook given that most economists have said that inflation will continue to rise? Is that a worry?
I do not think the future is that predictable. There's a very good monsoon. The rains have been very good. So that is a reason for food prices to be under control. If food prices are under control, many other things come under control because in India, studies show that food inflation leaks into the general inflation. Equally, a negative fall in prices will leak in. The world is having a relatively softening of commodity prices, but above all, of oil and gas. Some other commodities, not so much. In these circumstances, I think inflation should not be rearing its head. I think the future prospects right now are actually quite decent. Again, if you have the uncertainty of the U.S. economy or maybe a slowdown in anticipation of a trade war, all of that again would be anti-inflation. So I think that inflation is unlikely to rear its head in the next 3 to 6 months.
Right. Swami, lastly, 7% or higher growth expected for India, according to RBI estimates and several agencies as well. They've upgraded India's growth projections, including Moody's, IMF and others. What do you think is working in India's favor, and how is it that this growth can be sustained? And if yes, what are the long-term challenges?
The main challenges we are going to face is the fragmentation of the global economy. India is more globalized than even China in terms of trade to GDP. I don't think this is well understood. So while Mr. Modi and PLI all looks as though, everything is an internalized thing, the truth is India is a substantially globalized economy. If you further look at the global capability centers which have come up in India without any fanfare, are employing 1.5 million people, maybe 3 to 150, 200 billion of revenue. Huge amount of R&D going on out there, world class. So, while there is the global aspect of this, I think is more important. So the GC, I would say the global capability centers have been the most successful thing that have happened in 10 years of Modi. Modi will not talk about it because he did nothing to create it. It was created by globalization. The global shortage of skills meant that companies from the world over came to India because India is one of the few places that produces maybe 3 million STEM graduates every single year. And to take advantage of this pool of skilled manpower, the world has come here. It is far, far bigger than PLI. Believe me, PLI is nothing compared to the global capability centers. So the globalized India remains globalized. On the services side, therefore, it looks as though we will continue to do well, including global capability centers and service exports. But on the goods exports and goods production, I think the coming trade wars and protectionism will hurt us regardless. The idea that we can just keep growing at 7% in the face of all these global's problems, I think would be very optimistic. I would not be surprised to see a slowdown to 6.5 or even 6% average in the next 5 years.
Okay, global capability centers is a bigger phenomenon than PLIs. That's the word coming in. Thank you, Swami sir, for making time and speaking with us this morning and helping us dissect what really the Fed rate cut of 50 basis point means for India.
If you like this video, then like, share and subscribe to ET Now.